Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us here at Ausbiz. Let's check the local, let's check what happened internationally overnight. Global shares rising as US inflation met estimates. And that pushed the US dollar higher. Gold also rallying. Stocks on Wall Street were led higher by a rally in tech stocks on the prospect of another rate cut next week off the back of that inflation data. That saw the Nasdaq rise above 20,000 for the first time. The S&P 500 also higher, while the Dow ended marginally lower. Stocks, specifically Tesla shares, climbed to a record high as the EV maker extended a rally in the wake of the presidential election. Nvidia and other mega cap growth stocks, including Alphabet and Amazon, were also trading higher. Pharmacy benefit managers, including Cigna, CVS Health and United Health Group, fell after legislators introduced a bill that would force health insurers to divest their pharmacy businesses. Broadcom shares surged on a report that Apple is working with the company to develop its first server chip specially designed for AI. Macy's fell after the department store chain cut its annual profit forecast. And GameStop gained after the video game retailer reported a profit for the third quarter as it embarks on cost cutting. So core US consumer prices rose 0.3% in November, in line with economists' estimates and reinforcing bets that the Fed will cut rates by 25 basis points next week. However, the inflation gain was the largest since April, taking the annual rate to 2.7%, core annual CPI up 3.3%. Economists highlighted a welcome slowdown in prices paid for accommodation, with rent inflation at just 0.2%. US Treasury yields initially fell after that data, with the 2-year dropping, then retracing to 4.15%, the 10-year at around 4.26%. Now, traders are now pricing in a 96% probability of a 25 basis point cut by the Fed at its final meeting of the year, according to the CME tool there. And the Bank of Canada also cutting its policy rate by 50 basis points to 3.25%, stating that GDP growth was tracking weaker than expectations and that economic slack was increasing. Interest rates have now been slashed by 175 basis points since June. Well, the US dollar index was up on the day, while the Aussie has weakened further to be trading at 63.7 US cents. And that inflation data helped push Bitcoin back above 100,000 US dollars. In terms of commodities, oil prices increasing after the EU agreed to an additional round of sanctions threatening Russian oil flows that could tighten global crude supplies. However, OPEC cut its forecast for demand growth in 25 for the 5th straight month, and by the largest amount yet. Brent crude futures up 1.8% at $73 a barrel. Copper easing slightly, iron ore 1% lower at $105 US dollars a tonne, and gold has gained following that inflation print. US gold futures jumping 1.4% to $2,756 an ounce. So let's get some interpretation of that inflation data and the market moves as a result. Ira Epstein joining us from Linden Associates. Ira, good to see you once again. What did you make of that inflation data?
Well, it's still creeping up. That's the first thing. It's not going down. I think this is 4 months in a row of that. But what the Fed is saying is that the policy rate is still restrictive, and it just is one of those, as they call it, bumps in the road, and that the market should resume back down. And as you can see, as you pointed out, 96% probability in the swaps market that the Fed, in fact, next week will go with the 25 point. And I'm in that camp too. I think so. But I think what they'll then do is decide to hold back and not go in January, but go, if they go again, it'll be in March. And I think you have to start looking at 2025 and say to yourself, maybe we're just not going to get as many cuts next year as you thought.
So if that transpires, then what's the likely market reaction, do you think, Ira?
Well, we saw it. You've just made new all-time highs in some of the stock indices. The Santa Claus rally is right around the corner. The Santa Powell rally will probably be right with it. So I would say that, you maybe got a bit overdone today as a one-day deal. But I think today was important because now, until you take out the current break lows, I think you're looking at a market that's going to be talking about, can the market accelerate from this part into the first of the year? We typically rally either from the 17th of December through January 12th. or from the Yale Hirsch's way, the original Santa Claus, the 26th of December till January 2nd. There's two different parties, plays there, and you have to pay attention to them both.
So overall then, Ira, what, in terms of strategy, portfolio positioning, what are you expecting if you talk about the Santa Claus rally, the power rally, if you like? How do you position into 2025?
Well, I think you have to be first. There's one way you can do it just by using ETFs or the futures market. So there's one way you go about it that way. The other way is you still build your portfolio with things you like. You know, you can't get away from the fact that AI is temporarily everything. It's not necessarily the Mag 7. It's spread out now to the servers, if you will. And I'm not talking computer servers. I'm talking companies that serve the AI business. That has grown. I'm not convinced that this is spread itself out in other areas. If you look, for example, at the XLE, you're not seeing the market if you look at that. The oil companies, the refineries, the drillers, they've been coming down recently. We did see, as you brought up today, that the European Union made a 15th sanction now hit against Russia, but this one's against the shadow oil tankers. Can they do anything about that? How do they stop it? That's going to be the important thing. But all this going on really has to do with January 20th when Trump takes office, and can he get things done? That is going to be the biggest question of it all. Can he get peace made in different parts of the world? Your guess is as good as anyone else's. The market seems to think he can.
Remaining certainly optimistic. Now, Ira, you're mentioning oil there. What are you seeing in the market at the moment? The EU, as you said, increasing those round of sanctions against Russia, tightening supplies, yet that's been balanced with what we're hearing from OPEC at the moment, particularly as far as its 2025 outlook. How do you sum that up then?
Right. Yeah. OPEC threw in the towel on their math is what happened. Remember, you and I have been talking about that over the past month. I, for one, am not friendly to the oil market here. I think that the good rallies are probably to be sold until we see absolute demand come about. But here's the wild card for you. Right now, China is meeting in their, I think it's called the Politburo meetings, where they bring in their work Congress. And from that, it's the private big banks, it's the private state companies, everything's state owned, and they set what they're going to do. We already know the monetary policy and the fiscal policy. They floated a balloon just the other day of loosening their monetary policy. If they can do something to shore up the real estate market and get the economy moving in other ways, that would be great. That could get the economy going. I expect they're going to set another 5% target after this meeting. You don't know that until March, but that's basically where they set this is right now. The problem they have is Trump. And the more that they take him on, the more he pushes back at them. So I don't know what can be done there. Am I bullish oil here? I am not. Am I looking to sell hard rallies? I am still in the market. Am I bullish the gold? I am. Am I bullish the copper market? I am if China does something that I can live with. And that meeting doesn't end until the close of business tomorrow. You know, I think Thursday is when it ends. And with the time differences, we probably won't know anything in America until Thursday night. But don't go by what they say. Go by the market reaction to what China does, because what they say always sounds so good, and what they actually do doesn't turn out that way. That's been the problem.
But Ira, do you think it's also a case of wait and see, as you mentioned, with Trump, to see what his policies we put in place, that China will need to react to what Trump puts in place?
I think it is with everybody but China. That's the issue that I think you're dealing with. Do I think that America is going to slap 25% tariffs on Canada? No. Do I think it's going to do the same in Mexico? No. But do I think they're going to go after Mexico, where the Chinese businesses have been opening there and they assemble a car and send it to America? That is up for grabs. But when it comes to China one-on-one with America, I don't know. I think that there's anger on Trump's part that he was bested in the last round of negotiation with a lot of promises that did not materialize in grain purchases and other areas. So Once, it's his fault. The second time, he won't let that one happen. Got that? So he will look at this very different. I don't think you should look for China and the United States to quickly drop the gauntlets and become buddies again. I don't see that at all.
It is a fascinating time to watch, particularly to be in markets. You've got to be on your toes. Ira, great to get across what you're seeing there. Thanks for joining us from Linden Associates.
Thanks for having me.
All right, let's turn to what we're seeing locally then. And we're expecting a strong opening. As you can see, SPI futures up 0.5%. And we'll be focused on that when we get underway in just a couple of minutes' time. A couple of sectors to watch there. We saw tech obviously outperform on Wall Street. Gold is another one to watch, given the gold price has continued to climb as well overnight. Stay with us.